Hello everyone, this is your monthly update for the month of May 2020. I started the month by issuing a dip alert to warn people about the upcoming turning point starting the week of May 18th and May 25th. I was warning that the stock market should start to correct and a dead cat bounce should ensue, giving us a huge buy the dip opportunity. Well, the month of May is over and the stock market has not started the dead cat bounce I predicted. And that's okay. As we go through this journey together, things sometimes don't unfold exactly as anticipated, but as long as we are on the correct side and heading in the right direction, we're ahead of 99% of the public. The dead cat bounce is still coming, it's just been pushed back to the next turning point. In the meantime, Wall Street did get the headlines it wanted. Stocks notch big monthly gains. Investors have been encouraged by signs of states and businesses reopening, helping stocks rebound. And then we have this headline: Stocks end May with big monthly gains. U.S. stocks edged up Friday, heading toward a second consecutive month of strong gains. Investors have been encouraged in recent weeks by signs of states and businesses around the country reopening and stimulus measures from the Federal Reserve helping stocks rebound from their March lows. These headlines are important because the small-time investor will see these headlines and get confidence to buy this rally. But this is a sucker's rally that's being pushed to help the insiders sell this rally to the dumb money or the public. 3 weeks ago, Goldman Sachs was singing a different tune. On May 11th, Goldman Sachs says stocks will tumble 18% in the next 3 months and lays out 6 risks it thinks investors are ignoring. And CNN had this headline on May 12th. This is the most expensive time to buy stocks in 20 years. 3 weeks ago, the Wall Street insiders didn't want the public buying just yet, so they used their tool, or the mainstream media, to scare people away from stocks. Later, I'm going to be releasing a video on market psychology and mainstream media manipulation, but just keep that in your mind. The mainstream media is in the pockets of Wall Street and they promote whatever message they want promoted. Obviously, they're the sponsors. And now the media is helping the insiders hype the rally, pushing the public to buy the rally so the insiders can take their profits. And by insiders, I'm referring to those that trade in advance of the public, like Senator Burr. DOJ still investigating coronavirus stock sales by Senator Burr, but drops probes of Loeffler, Inhofe, and Feinstein. Federal prosecutors are still investigating stock sales. And a key point here is federal prosecutors are still investigating stock sales by Senator Richard Burr of North Carolina in advance of a coronavirus-fueled share price plunge. Yes, the senator sold in advance of the coronavirus stock market crash. You know who did too? Jeff Bezos. Yep. Jeff Bezos sold 3.4 billion of Amazon stock just before COVID-19 collapse. As trillions of dollars were wiped off stock markets, some of the world's richest got lucky. Millions of people across the world have lost their jobs and trillions of dollars have been wiped off the value of stock markets, but not everyone has lost out. Jeff Bezos, the world's wealthiest person, is $5.5 billion richer today than he was at the start of the year. Lucky guy, huh? Lucky him. But wait, there's more. Other U.S. executives that have been either lucky or smart by selling large chunks of their shareholdings in February include Larry Fink, the chief executive of fund manager BlackRock, who saved a potential $9 million in losses, and Lance Ugla, CEO of data firm IHS Markit, who sold $47 million of shares on February 19th that would have dropped to $19 million if he had held on to them. In total, U.S. executives sold about $9.2 billion in shares of the companies they run in the 5 weeks before the stock market rout. Selling before the 30% collapse of the market saved them from paper losses of $1.9 billion. If these insiders sold before the crash, you can bet they bought the dip. That's why they wanted to be in cash and be liquid and avoid losses. And they've been riding this rally and are planning to sell to the dumb public or investors not versed in history and dead cat bounces. Young investors pile into stocks, seeing generational buying moment instead of risk. And the key points: the major online brokers, Charles Schwab, TD Ameritrade, E-Trade, and Robinhood, saw new accounts spike in the first quarter when stocks experienced a dismal rout and subsequent rebound. The new accounts may represent new investors who sense a generational buying moment but do not have much background in the equity space. Sorry to say, but there's going to be another slaughter of investors coming up. I stand by my call for a dead cat bounce, and it's coming. Just be ready, stay on the sidelines, and sit in cash. The key target to look for is 27,102 with 34. As long as the stock market does not surpass that by July 24th, the dead cat bounce should still come by at the latest on December 2020 after the elections. All it is just a matter of time. We just have to let everything unfold. Until next week, take care and be safe out there. Remember, his name was George Floyd.